Okay, I think we're ready. Welcome, everyone. Good afternoon. Thank you for taking time out of your schedules and being here with us in this TradeStation webinar. We are going to highlight functionalities of the TradeStation platform that are going to help you in your options trading. So before we get started, let's go through some introductions and some disclosures. Some of you already know me. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. For me, it's always a pleasure to talk about the TradeStation technology, especially if I'm helping you make the use of TradeStation a little bit more efficient. Today's title is Using Activation Rules for Strategic Order Execution in Multi-Leg Options Spreads. So yes, we're going to talk about options and multi-leg options, spreads, and how you can use activation rules in order to manage and create conditions around those trades. But before we get started, the usual disclosures, keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, that active trading is not suitable for everyone, especially when it comes to trading options, which carry a high degree of risk. Past historical performance is no guarantee of future results. And if you need additional information on these disclosures, you have multiple links here in this PowerPoint slide, but you can always go to www.tradestation.com/important-information, which is where all those links are located. I'm going to share that link again right here in the chat so that you can jump right into it in case you need a little bit more details. As I said at the very beginning, we are going to focus on options. And one of the things that I wanted to show you is the Options Education Center. Okay, so this is the Options Education Center. And I'm going to, thank you, Brandon, for pacing that. I forgot to say that I'm joined by my colleague, Brandon. You probably know him already. He's done great presentations on options, and they're all available from within the Options Education Center. So that's one of the reasons why I wanted to show you the Options Education Center first, because there's a lot of content that we've posted here in terms of articles, PDFs, TradeStation workspaces, webinars. So there's a ton of information that it's available here for the sole purpose of assisting you in finding trading ideas or learning a little bit about an option strategy, learning how to place that particular option strategy using OptionStation Pro. And today we're going to do a focus on TradeStation's technology on how you can use these activation rules to trigger those orders. But I want everybody to save this link, bookmark it, so that you always have it available. We're going to be periodically adding new articles and new content to this page, so make sure that you visit this page regularly. We have a few strategies already there on straddles. We have articles on bull call spreads, bear put spreads, and a lot more articles that are upcoming. So make sure that you visited occasionally to see what's new. All right, let's go ahead and switch over to my TradeStation platform and start talking a little bit about activation rules. Activation rules sometimes is something that not a lot of TradeStation users are aware of. Maybe because it's a little hidden. Sometimes you do have to enable advanced order features in order to see the checkboxes, and you may miss it, if you're not really paying attention or looking for that particular functionality. On the TradeStation desktop, if you go to the trade bar, and you look at this whole bar and with all the buttons and all the boxes, you don't see activation rules here unless you go over here to the right and you click on the advanced button. That's where you see the checkbox for activation rule. On OptionStation Pro, it's a little bit more visible because you don't have to click anywhere to make it visible. It's shown at the bottom of your trade bar. Let me show it to you. Let me go here to OptionStation Pro. And let's say, for example, that you were to trade something out of this chain. I'm going to click on the asking price of this 240 call. It goes to the trade bar right here at the bottom, and you can see that at the bottom you have that checkbox for activation rule. Now, what is the purpose and what is the reason why we have this checkbox here for activation rule? You can use it to create conditions that will trigger an order based on price or based on time. And let me rephrase that, because you can also base the activation on time and on price. And not only you have to choose either price or time, you can do a combination of an activation that triggers based on both rules, a rule based on time and a rule based on price. So it's very flexible. When in terms of prices, you can add up to 4 different prices to the activation rule box. So there, it adds on to the flexibility, because not only you can base the activation on a single security, maybe you want to also add another activation rule based on an index. Or if you're trading options, which is the main focus of today's presentation, you probably want to base the activation of an options spread based on the prices of the underlying. All those sorts of combinations are possible within the activation rule dialog. We're going to go into the dialog, look at all the details and how you can set up these rules. Now, one of the reasons why you would want to use activation rules is because of timing of orders. Timing, because there may be a important market event coming up, maybe a Fed's report, maybe an earnings announcement. Whatever the market event may be, we know that that's going to have an effect on market price, market fluctuations, and we can get ready for those price movements based on that time. If you know the exact time when a report is going to be released, you can set up different orders based on which direction the price is going at that particular time. So let's go here into the activation rule dialog and show you some of the options. I'm going to check the box for activation rule, and I'm going to click here on the ellipsis. Time, you can see that it's a specific checkbox. I can check it, and then you can see that the operator cannot be changed because you can only set a time that is greater than or equal to the time that you specify. Now, let's talk a little bit about time so that we have a full understanding on how to set up this feature. Because if you look over here on the right-hand side, it says local time. One of the things that you have to be aware of is that TradeStation kind of knows what your computer clock is set to. It knows the time zone that your computer is set to. And the time that you see here within the activation rule dialog is based on your computer clock. So whatever time zone your computer is set to, make sure that when you set up a time here, you're using your computer's clock's time, your time zone. So we know that the market, the stock market to be more specific, we know that the stock market opens at 9:30 in the morning and it goes all the way until 4 p.m. in the afternoon, right? But depending on your time zone, those times may be different. If you are on the West Coast, you're going to be 3 hours behind, right? So instead of the market closing at 4, the market's going to close at 1 for you. So if you're going to be setting an activation rule here in this dialog, always think about what your time zone is and what that time relates to on the actual stock market. So those are the things that we want to be aware of so there's no confusion. So if you want to trigger an order at 2 p.m. Eastern, which is 2 p.m. like New York time, but you are on the West Coast, that would be 11 a.m. in the morning for you, and you would have to set that time right here if you want it to be triggered at 2 p.m. New York time. Okay, so again, just to recap, this setting will always use your computer's clock. So make sure that you know what your time zone is on the computer and what time it says here. But it's a very easy feature. All you need to do is just check the box for time, set the time that you want this order to be activated at, and that's it. You click OK. For example, if I set this to 3 p.m. 3 p.m. local time. My computer, by the way, is on Eastern time. Sometimes I set my computer, even though I'm on Central time because I live in Texas, most of the time I set my computer to, or my work computer, I set it to Eastern time, not only because I want to avoid confusion when I set up, activation rules, but I also Our headquarters are in Florida, so I always think in Eastern time, even though I'm on Central. So this particular local time that you see here, it's going to be Eastern time because that's what my computer is set to. It's set to Eastern time. But if I set an activation rule at 3 p.m., all I need to do is just click OK. And whatever order that I submit at this point is going to have that activation rule connected to it. Let's go ahead and put in an order and see if we can create a hypothetical scenario. On this option station, if you look on the top left corner, I have ADP, and I have a chain that is expiring about 51 days from now on May 17th. The call that is highlighted right now is the one that I clicked on to pop up the trade bar. So let's say, for example, that we are going to buy that call. It's being priced at $13.40. And we want to reduce our cost by selling a call with a higher strike. So let's say, for example, that we want to sell that 260, which is selling at $3.20. I'm going to hold down the shift key. I'm going to click on the bid price. And you can see that that's the way that I can manually build a spread. I just created what's called a vertical spread. And I see those two legs right here at the bottom. Notice that I added a leg and my activation rule checkbox was unchecked because for protection, it just makes sure that once you make changes to anything that you're trading, you have to go in there and set it again. And it's just for security. A lot of times you may not be aware that you've checked it, and then we don't want to catch you by surprise. So I'm just going to check that activation rule one more time. I'm going to click on the ellipsis to make sure that you see the time was reset. So I'm going to check the time one more time. I'm going to set the time here to 3. I'm going to say 0000 local time. Click OK. And then all I'm going to do is I can place the order now. But one of the other things that you, as a trader, have to be aware of is pricing. You know, I know that's pretty close to 3 p.m. right now. We're only about 45 minutes away from reaching 3 p.m. But this is the actual natural price of that spread at this moment, $10.20. But what price will it be at 3 p.m.? You know, we can make an estimate based on all the calculations we can do here in Option Station Pro and the pricing model that we're using, and estimate a value of the option at 3 p.m. However, it's going to be challenging for you to know exactly what price this particular spread is going to be at 3 p.m. Of course, I can say, well, I want to enter this spread at least, $10. That's what I want to pay for that vertical spread. And you can set it like that. Now, the likelihood of that order getting filled, there's no guarantee because you are specifying a price. And once you get into a limit order and you specify a price, of course, you're telling TradeStation, I want that price or better. But if the market is not able to give you that price, then your order may just sit there and not get filled at all. So that's one of the risks of setting an order like this with a price specification at a later time. Say, I want to buy at this price, but at a 3 p.m. But let's see how this works. I'm going to click on place order right here on the bottom right. And this is my confirmation window. And it says a vertical. It has my pricing specifications, but I want you to focus on the word here, advanced. And it says activation time, 3 p.m. Doesn't say Eastern time, but because I'm going to just remember that this is my local time, which is Eastern time. I want to say yes, and then the order goes through. If I go over here to the Manage tab where I manage my options orders, I'm going to open up my open order right here, which is my vertical, and scroll to the right-hand side and look at the advanced column. That's another place where you can check what your activation rules are. And you can see that I have a time activation rule here, and it has to be equal to 190001, which, is what I set it to. But you can see that in two places, in the confirmation window and also here in the Manage tab, you can check to see what that activation rule is set to. When 3 p.m. comes around, my vertical is going to be activated. It's going to check to see what price that vertical is trading at 3 p.m. And if it's trading at a better price than the price that I specified of $10, or if it's trading at $10, I probably will get a fill. A lot of times, if you're not really sure what the price is going to be at a time in the future, then a lot of times you can use a market order for options, which is not a favorite type of order because of slippage and the way that the market orders behave. Sometimes it opens yourself to unfavorable prices, but at the same time, you are more likely to get filled by just sending a market order at a specific time. All right, so let's go ahead and take a look at some of the questions that are coming through. This feature that I'm talking about, based on the question that I see here in the chat about being available on TradeStation Mobile, it's only accessible from within the TradeStation desktop. So it hasn't been implemented on the TradeStation Mobile yet, although if you want it there, I encourage everyone to submit feedback through the feedback button on the mobile app, and that'll go directly to the product managers, and they'll prioritize those features based on how many people have requested. Let's go ahead and take a look at some pricing activation rules. I'm going to go over here to my chart to create sort of a hypothetical scenario. Let's see. That would be a great enhancement, Chris, if you had the ability to select the mid price, whatever that mid price is, at the moment that the time activation triggers. That would be a good enhancement, because then I wouldn't have to supply a specific price. In this case, the way that is created, I do have to enter a particular price in the order. But having the ability for you to check, oh, just get me the mid price at that precise moment, or join the bid, or join the ask. That functionality is available here on the trade bar. On the trade bar, and you can do it on single legs. For example, if you pull up an options tab and then you put in an option symbol in here, you're going to have some auto pricing functionality that allows you to join the bid or join the ask. I don't believe this feature is available on a spread setting. So if I go here to spread and I go to vertical, you see when I go here into a vertical, like a spread trade bar, there's no auto button that I can choose from. But it would be great to have it. Of course, I agree. Okay, let's go ahead and take a look at some of the pricing functionality that I wanted to show you. This is Cisco, by the way. I'm going to look at Cisco over here, and I'm going to assume that Cisco is going to likely go on a bullish rally. So I'm bullish Cisco, and I want to probably build a bull call spread. But let's do something. I'm going to draw some levels here that are important in the movement of Cisco. I'm going to go here to the drawing menu and go to horizontal line. I'm going to say that this level of maybe 52 is important. It happened, worked a little bit of resistance here, so it didn't quite go very much past that 52 level. So maybe I'm going to use that 52 level on some sort of a target. And at the same time, I'm also going to draw another horizontal line and draw it somewhere around here, around 48. Why 48? Because we did hit some support here. The price activity started to drop, stayed here for a while, and then started to rally again. So I'm going to say that, and this is just an assumption, this is just an example, that Cisco is poised for a rally, and it's going to go up, and I'm going to place a bull call vertical spread so that I can take advantage of that rally. At this point, if I were to put in a bull call or a vertical at this price where Cisco is at the moment, which is 49.47, there's likelihood for the price of Cisco to come down to support and then rally. So there's two things that could happen. It could go from there and skyrocket all the way up, or it could go down, hit that support line, and then bounce back up. In terms of, entering a bull call spread, we're always looking for the best, or the optimal price, to enter that spread. Let me show you a few things that we can do. I'm going to come over here to my Option Station Pro, change the symbol here to Cisco. Let me look at the option chain. Okay, we're looking at the options that expire in May. These are the monthly options. And let's suppose that we're building a spread. Let me go back here to my chart. I'm going to look at my levels. Okay, let's say that we want to trade. My mouse is kind of freezing here, so give me just a moment. I'm going to trade this 50 with this 55. Okay, and you can see the pricing right now. It's $1.20. However, maybe I don't want to send it right now. Maybe I want to make sure that I optimize my entry by waiting for the price of Cisco to drop a little bit. Maybe all the way to the support level, or maybe somewhere in between. I choose the price that I want to activate that order at. But let's say, for example, that before Cisco goes on that rally, I think it's just going to go and bounce back, from that support level at 48. I can come over here to Option Station Pro. I can check my activation rule checkbox, go into the ellipsis, and do the following. I can check the price. I can enter the price of the underlying within this option spread, which is pretty interesting. I'm trading a spread that has two specific, calls. It's a 50 strike call and a 55 strike call. Each one of these has a unique symbol, but I can base the activation on the underline. In this case, I'm going to type in Cisco. I'm going to add it. And here you can see that I can set that price specification, that price trigger, where I say, I want Cisco to be lower or equal to, actually, no, this will be, yeah. And I can say, I can set up a price. Maybe I can set up a price at 48.10 if I want to. If I go back to the chart, 48 is my support. So a little bit higher around here, or I can go even higher at 48.25. So I don't have to wait all the way when it reaches support, but maybe just a more favorable entry price. I can say if it goes to 48, if Cisco drops to 48.25, then I'm a buyer of that spread. I set my activation rule and I place my order. Again, one of the things that you have to be aware of is pricing as well. We go back to the example where we submitted that order for ADP. We're not really sure what the price of the options are going to be when the price of the underlying drops to 48.25. That's a big question mark. Of course, we can do an estimate. We can look at the graphs. We can look at, all the valuations and have an estimated of what the options are going to be worth at that moment. But the exact price is going to be challenging. And if we specify a price, there's a likelihood of our order just sitting there and not getting filled at all. So if you want your order to be, if you want your order to have more chances of getting filled, a lot of times we come over here to the order type and set it to market, and then place that order with that price activation. So we're waiting for Cisco to drop to 48.25. I'm going to say yes here, and the order goes through. Take a note that even though it's a market order, when I come over here to my Manage tab, I see my vertical for Cisco. It's a market order. You can see that it says market right there under the price. But over here on the right-hand side, I see my condition, which is Cisco less than 48.25. All right, so those are great features that you can use in order to condition your options trading on the underlying. In this case, we are trading a spread based on the prices of the underlying. Let me show you another application of this great feature, which is a behavior or something that actually Brandon showed me, which I found really interesting, and I'm going to share it with everyone here so that that is something that you can do to manage any open positions. Let me go ahead and replace that vertical that I just placed here with an activation or with an actual position. Let me see if I can do it right here from within this dialog. I'm going to do cancel replace. Notice that I just right click on the order, clicked cancel replace. You see, I cannot change the activation rule. So the only things that I can change here, not many things. I think the only thing that I can change is the quantity. So rather than cancel replace, let me just go ahead and cancel the order. Let me just right click up here and just say cancel the order. There it goes. And what I'll do is let me right click and create a duplicate order. There we go. It creates a duplicate of the order. I'm going to turn off the activation rule because I want to get filled. I want to have a position open. I'm going to place the order.
Order filled.
And it gets filled. You see my two legs right there. I'm going to combine them by clicking and dragging. A lot of this functionality of clicking and dragging and how to use OptionStation Pro, I go over in my Strategize Options Trading with OptionStation Pro webinar. It's there in the options. I believe it's not there yet, but it's going to be there eventually. I did a presentation on functionality, overall functionality of OptionStation Pro. So if you're new to the platform, you can always go to that webinar and learn how to use all the different settings of OptionStation Pro. Especially, you know, how to build spreads and how to monitor spreads. So I clicked on one of the legs, dropped it on top of the other, and created this vertical spread. And what I want to do is I want to manage this spread based on the prices of Cisco. Maybe I'm going to use the same levels that I identified here on my chart, where I'm going to use 52 as a target level, and I'm going to use 48 as a stop loss level. How do I set up this trade? Because what we're talking about is something very similar to a bracket without using OCO orders. One of the things that we always say here in TradeStation and OptionStation Pro, and I say this in my classes too, is that bracketing is not available for options spreads. Let me be more specific. OCO orders are not available for spreads. However, using it this way is a workaround where you can set up two different activations on two different prices that'll work similar to a bracket, where you have a behavior happening if the movement is favorable, and then you have another behavior or another action happening if it goes against you, if it's not so favorable, if it's a losing trade. So let's go ahead and set that up. I'm going to go over here to my OptionStation Pro again. I go here to my position and I right click on it and I say close this position. I have my vertical right there at the bottom on the trade bar. Same concept about the pricing. You know, I'm not sure what price this vertical will be if it hits support or it hits resistance. You know, I'm not really sure. And even if I knew, I'm talking about two different behaviors. So it'll be one price if it reaches resistance, and it'll be a totally different price if it reaches support. So in this particular case, I am forced to change this to a market order. I cannot specify two different prices here, at least for the execution of my spread. So I'm going to change the order type here to market. And I'm going to set my exits. I'm going to go here into activation rule, go into the ellipsis. I'm going to go here into the price checkbox, and I'm going to type in the symbol for the underline. I'll add it once, and I'm going to add it twice. I added twice because, remember, I'm setting two different price activations. I'm going to click on Cisco one more time and add it again. Interesting. And I said that at the very beginning, and I'm going to say it again right now. You can add up to 4 different prices. And it doesn't have to be the same symbol. You can mix and match different symbols. In this case, it makes sense to use the same symbol because I'm using my support resistance levels on Cisco to trigger this spread. And I'm going to say if Cisco is greater or equal to 52 or less than or equal to 48. And one important step that you cannot forget is make sure that you change this and to or. What's the difference? If you leave it on and, which is the default, and you forget to change it, it's going to expect Cisco to be above 52 and below 48 at the same time, because that's and. So you want both to be true, and that's impossible. Cisco cannot be above 52 and below 48 at the same time. So you have to make sure that you go here to the right-hand side and change this operator to or, so that if either side meets the condition, then you're going to get an execution on that order. Make sense? So don't forget that drop down and change that to or. So now we have the two conditions in place. If Cisco goes above or goes to 52, it's going to trigger my trade. But if it drops to 48, it's going to trigger my trade also. So I have two exits at two different levels, and I'm going to be able to manage my trade without intervention. If I click OK here, one thing that I would do if I wanted this trade to continue to monitor those prices more than just today is I have to change the duration of this order. If you guys are aware of our trading tools, most of the time, these trade paths are going to be set to day. And I'm talking about the duration. See how it says day right here? Switch it to GTC if you want those prices to be monitored more than just today. If tomorrow the market opens and you want that order to be there, make sure that you leave it on GTC, and it'll monitor those prices next trading session or the trading session after that. This is going to remain in the market until you cancel that order or it reaches its maximum, which I believe it's 90 days. That's the maximum you can have a GTC out there in the market. I don't see any traders leaving orders open that long, but just keep in mind that this will remain until canceled. A couple of things that I forgot to say and that are important in this setting, because I was talking about time activations, right? I was talking about time activations. I think we were clear in explaining that it's going to be using your computer clock, your time zone. But at the same time, I think I failed to tell you that it's only going to work on the day that the time activation is set. So it's not something that you can set for a future date, because a lot of times there may be confusion in saying, well, I want to activate my order tomorrow at 10 a.m. It doesn't work that way. The time activation rule here on TradeStation has that limitation. Have to be aware of that, because it may not behave the way you want. Like in the morning, if you're getting ready for trading, it's early in the morning and you're setting up your trades. All these options trades can only be placed during market hours. So there's no preparing pre-market. So come 9:30 a.m. Eastern time and the market opens, yes, you can set up activation rules based on time for that day only. You cannot set it for the following day. The only ones that work on multiple days after the day that you're setting it on is the price activation. Those are monitored multiple days, but the time activation is only one day, and you have to set it that same day. All right. Yes, thank you, Brendan. All that information is available in the Options Education Center, including this webinar, which is being recorded, and you'll have an opportunity to play it back and practice. I do encourage everyone to use the trading simulator. It's what I'm using right now. If you notice, my account numbers starts with the letters SIM. So a lot of this functionality, I would test it on the simulator before I use it on my account, just to avoid any mistakes. So I have my order set to GTC. I am monitoring those two levels for Cisco, and I'm just going to place that order. Notice that now my activation rule has those two prices, Cisco greater than 52 or Cisco less than 48. I click on yes, and the order goes through, and you can see it up here. This is the market order, but it has those two conditions waiting for Cisco to come down or come up. Does that make sense? Now, let's go ahead and show you one more example, because we talked about time activations. This last example that we talked about is kind of a bracket order where we're monitoring a support and resistance levels, and and activating the order based on two different conditions, similar to a bracket. Now let's go ahead and look at an example where we use the premium of an option in order to set these same profits and targets. Let's go ahead and do that on a single leg. That's one of the things that setting up price activation rules on options, on option symbols, is only possible on single legs. And I'm going to explain why once we get into the example, and it'll be a little bit more clear, okay? Let's go ahead and first of all, establish a position on a different symbol. I'm going to go here to, let's go to Apple. Okay, these are the main options for Apple. So let's go ahead and I'm going to buy the 170 call. Okay, I'm going to do it at market so that it fills me immediately.
Order filled.
Okay, so let me go here to the Manage tab. I have my Cisco trade and I have my Apple trade right here. I traded 5 singles, strike price of 170. My price was $8.05. So that's the premium that I paid for this. Not for the, did I say spread? No, this is a single call, but this is the price that I paid, $8. So let's go ahead and do something. I can use the premium in order to set some profit targets or stop losses on this position. And I can do that very easily by calculating how much profit and how much loss I want. So I'm going to right click on this position and close it. Close this position. That'll bring up the trade bar. Don't be afraid of doing that right click and close the position, because it'll always send you to the trade bar for you to specify what is it that you want to do with that order. You can see the pricing down here. And what I'm going to calculate is probably a $300 profit versus a $100 stop, like a 3-to-1 risk reward or reward risk ratio. So $300 profit, $100 stop loss. In this case, you know, I traded 5 contracts. I'm not sure why. I had uninstalled my TradeStation. What I really wanted to trade was 1 contract, because it just makes the math a little bit easier, right? Because now I have 5 contracts and I have to multiply it by the number of contracts too, which is okay. It's a little bit more complicated, but let's leave it the way it is, you know? In fact, yeah, this is selling the 5 contracts that I have. So what I can do is the following. I still want, you know, the $300 per contract and the $100 per contract. This doesn't really matter because I'm going to set my prices based on premium, and then the quantities will play out that whatever profit and loss that is, you know. If it's 5 contracts times the 300 that I'm expecting, that's 1,500 profit. And the 100 times 5 contract just is $500 loss. But let's assume that there's only 1 contract so that I can make the math a little bit easier on my head, right? So I did enter the trade at 805. So in order for me to make the $300, that price or the premium needs to go up $3, right? It needs to go up to $11, $11.05. And for me, if it drops to $7.05, it drops $1, that would be 100 for every contract, of course, right? So what I do is I go here to the activation rule. I go into my settings or the ellipsis button, and I go here into the pricing. And I have to enter the price or the symbol for this call. Now the symbol is going to be somewhere here. Where do I see the symbol? Maybe I can just type it in. If I click on cancel out of this, here's the symbol, okay? The symbol is always displayed in the details of your position. AAPL 240517 is the date of expiration, C is the call, and 170 is the strike. A lot of times it's challenging to remember the format of that symbology. So what I do most of the time is just right-click on that symbol or that row, and I say copy the symbol, because I can always paste it whenever it's needed. You can always search for it. If you're good with with symbols and the way that they're structured, you may be able to just type it in yourself manually if you want to, but I always forget what the symbol is. So I right click on the position and I copy the symbol. So when I come over here to the ellipsis, I can go inside of the price box and then say paste, and it pastes the symbol in there. I'm going to add it twice. And when the premium of this call goes to 1108, or when it drops to 7, not what I wanted. It is 708, so it has to be greater or equal to 1108, or less than or equal to 708. And always remember, if you're setting a price activation on multiple levels, you have to change this and to an or. It cannot be on both places at the same time. But now notice that I'm using the premium of the option as a way of capturing, profits and a way of stopping losses by just using the premium value inside the activation rule dialog. I click OK to this, and then I can just place my order. Again, I don't know what the price of this option will be, so I'm going to set it to market. I'm going to use those prices as activation on that order, and I'll just exit it if it reaches those levels. I place the order. I see the details of my activation right here, and then I type or click on yes. And the order is right there at the very top. This is a single at market. And if you look over here on the right-hand side, we have the two conditions. This column is not as wide as it should be, so I can just continue to stretch it until I see the full pricing conditions. Not the most user-friendly column, but there it is. So we have the Apple symbol greater or equal to 1108, and the Apple symbol less than or equal to 708. So we have the two conditions in there, and they're being monitored. The good thing also about these types of orders is that they are going to be sitting on the TradeStation execution network or the server. So you don't have to necessarily have your platform open, to be assured that we're monitoring that trade. It's already out there. TradeStation will monitor the price activations, and when the prices are activated, then the order will go through. Another important thing that I wanted to point out is that when you turn on activation rules on options, and I've been saying, reaching this level or trading this level, a lot of, especially when you reference options symbols like this, it's using bid and ask information, not trading prices. When you set the activation rules inside of the TradeStation platform and you set them on futures or you set them on a stock, yeah, those are going to be using tick or trades. But when it comes to options, these options are going to be triggered based on the bid and ask. It's not going to be using the trade activity. And another thing that I wanted to talk about before I end the class is the trigger type. When I go into the activation rule, let me go back into the trade bar and go into the ellipsis. You probably saw this trigger type with drop down. By default, this is set to a single trade tick. It does say single trade tick, but remember what I just said, that when it comes to options, it doesn't really look at a trade on the option. It looks at the bid and the ask. Whenever you see a bid or ask have the price that you set here in the price activation, that is what is going to activate your order. You may change the way that TradeStation reads these trigger prices by going into this drop down. Single trade tick just expects one print on that bid or ask at the level that you specify. Now you can set it to double, double trade tick within NBBO. NBBO, by the way, it stands for National Best Bid Offer. And DTTN just stands for double trade tick within NBBO. That's what the abbreviation of this whole thing is. So what you're saying is that you want the price to be within the bid and ask, but always be aware of, what could happen at any moment based on these prices that the exchanges are reporting. Sometimes they may be late prints, out of sequence prints that may be reported by the exchange at a different time, not necessarily because it happened at that time. And those ticks, are specifically categorized because of that characteristic. Um, those prices, those bids, those asks are also used in the trigger. So you may find that your options was triggered by an out of sequence trade, which is possible. I'm not saying that it happens all the time, but there is a possibility, and we always have to talk about the risks and things that could happen to your order in that sense. So yes, it is open to be triggered by an out of sequence trade, or for the slippage that could happen, at any moment because you're using market orders. So always use this functionality with that awareness that a lot of these factors can play into, how the order is executed and entered into the market. All right. So that's it. That's what I wanted to show you. So let me go ahead and open up the floor for Q&A and see if we can answer some questions live. Is that conditional order? This is from Michael. Only linked to the one position you selected. What if I have a multiple spreads open for the same stock, multiple positions? Yeah, the when you set up an activation rule, you're literally right-clicking on a position and closing that position with those activations. So if you wanted to set those activations for other spreads or other positions that you have on that underline, you would have to set those up manually. What is SST in the activation? STT stands for single trade tick. That is the default. And when TradeStation sees the price print from the exchange, that is exactly the time when the order will be active. That's what STT stands for. Are there explanations on education for the trigger type? Yes. From within this dialog, let me show you how you can access more information. From this dialog, click on Help. Okay, and right here, there's a link. You can see it stands out because it's in blue. It says Activation Trigger Type. You click it, and then you have this whole document that explains the trigger types. So you have the single triggers, and it explains, what the behavior is in more detail. And you have some examples right here at the bottom. So you have options example for single leg. So make sure that not only you read the information on the trigger types on top, but also look at the examples and how TradeStation will handle these trigger types based on an options trade, which behaves a little differently than an equities, a stock or a future. So a lot to read in here if you're interested. The default is SST single or STT single trade tick. And but if you want to make sure that there's a second print just to guarantee that, yeah, this is the exact price and it's not just a bad print, then you're welcome to change the behavior. Question Anna is asking, is it good to leave at STT for trigger type? STT is the default. Yes, I cannot say which one's better. I'm just making you aware of the different behaviors of what could happen to an order. It's up to you to choose the one you think works best for you. So that would be something that you'd have to test. As I said before, STT is just the default. But if you want a little bit more guarantee on the price, guarantee in the sense of, oh, it happened twice, it happened 2 times. So it's not only a bad tick. If it happened a second time, it's probably a right tick, right? And if a lot of times, if you're trading securities that are highly active and have a lot of volume, that double tick or the double tick or the twice tick, that could mean nothing because you could have those ticks within seconds, So that's something to keep in mind as well. Yeah, if you place an order with an activation rule, whether it is on time or price, it won't allow you to cancel or replace. So it won't allow you to edit that order. So whenever you do activation rules, you have to cancel the order and submit it again if you want to change those activation rules. The class is being recorded and it'll be available in the Options Education Center. Brandon has shared that link right there in the chat. Make sure that you click there and you bookmark it because all our options content is going to be uploaded there. It'll also be available on YouTube. So if you rather watch videos on YouTube. We are also uploading all our webinars to YouTube. I think we've reached the end of the class. If I didn't get to your question, please, again, our email address, I'm going to put it right here inside the chat, is education@tradestation.com. Don't copy and paste because I think I put in one extra space between the education and the @ symbol, so it won't work for you. So education@tradestation.com, and for any follow-up questions or anything you need from these sessions, okay? Thank you very much for joining me today. Thank you for being part of the TradeStation family. Please check the events calendar because there's a lot of topics coming up, not only in the options world, but also on the TradeStation technology, on technical analysis, easy language programming, strategy development. So make sure that you keep an eye on those events that are upcoming. Thank you guys for joining me today. Have a wonderful afternoon, and I'll see you next time. Goodbye, everyone.